How much money is needed to flip a house? By the end of this video, you're going to know how much cash you really need to flip a house and how to fill in the gaps for the parts that are missing. Do you think you need $100,000 in the bank to flip a house? Well, that's one of the biggest myths that are out there, and I'm going to show you how little it can actually take to flip a house. What if I told you I flipped houses for no money at all? And now hundreds of our students have also done the same exact thing. In this video, I'm breaking down exactly how much you need, how much of it can be covered by loans and other people's money, and how much you need to make it work even if your bank account is low. Okay, so flipping requires money. You gotta buy the house, you gotta pay for the renovations, you gotta pay for the closing costs, you gotta pay for the holding costs, you gotta pay for all the costs associated with the house. But the truth of the matter is, it does not have to be your own money. And here's the great news. You already do this. Have you ever bought a home? Have you bought a car? Do you use a credit card? Well, if you use any of those things or have, then you have already used other people's money to purchase something else. Yes, you have to make the payments, but you use somebody's lump sum of money to get you started. I want you to put that in your mind as we start this video because it's the same exact concept when you're flipping a house. You can borrow a portion of the money or you can borrow all of the money for your purchase price and the renovation costs, and I'm going to show you exactly how to do that. So the most common lenders that people know about when it comes to flipping a house is called a hard money lender. It's not Guido the Killer Pimp. It's going to break your kneecaps if you don't show up. It's gotten a lot more sophisticated than that since the 70s and 80s. These are actually a group of people that are willing to invest their money at a higher risk and charge you a higher interest rate because they're going to invest in your property as a short-term loan. Now, there are some limitations on these loans. In other words, they will typically loan you anywhere from 70 to maybe up to 100%, mostly 70 to 80% of the purchase price of the home, of the property you're going to flip. And a lot of times they'll go up to 100% of renovation costs. Not always, but up to 100% of renovation costs. Many times they want you to have some of your own skin in the game. And here's where you say, well, Glenn, here's where I need money. Well, yes and no. There's other ways to cover that money. But let me just tell you first off that as a total, usually 65% of the ARV or the after repair value is how much they will loan on that property. Now, the good news is they will loan you purchase price money and they will loan you the bulk of the renovation money, where a local bank wouldn't ever do that. They only loan on the purchase price of the money. So again, as we're going back to how much money do you need, if you go the hard money lender route, usually you're going to have to come up with 20 to 30% of the overall loan of your own money in the deal. Many times if you do this correctly, they don't care if it's not your own money. In other words, they want some skin in the game, but it doesn't have to be your skin in the game. So you can fill in that gap with other things. For instance, you could actually do a cash advance on a credit card if you had to come up with $20,000 or $30,000 and put that money in the deal. You could take a loan out against your current assets. Maybe you have a car you could borrow against. Maybe you have a home with a HELOC or a home equity line of credit or the rental property you could borrow against to take that money. You could borrow against your stock market portfolio or your retirement account or a life insurance policy. There's a lot of ways you can find the money to cover the gap that will give you 100% financing on your deal. And I recommend if you can do 100% financing, you should get in the habit of doing that because you can do so many more deals consecutively if you're not worried about having money all the time. Imagine that you had an unlimited supply of money so that as you found deals, you never had to say, no, I can't buy that right now because I'm just not quite ready. You don't want to do that. You want to be always prepared. So if you're using other people's money, that's fantastic. So if you're using hard money, you have to, number one, use their money for usually, like I said, 80% of the total loan amount, but you can use other sources to cover the difference. Now with hard money loans, one of the cash flow challenges is, yes, they will pay up to 100% of the renovation costs. One of the cash flow challenges is you are going to have to front that money up front. Meaning, as soon as there are renovations that are done, you're going to have to pay the contractor for the material and the labor, unless you have terms. Most contractors, they don't really want to give you any terms. You might have terms on a credit card for your material costs, but not for the contractor themselves. So you have to cover the money up front, then the hard money lender will come out and do an inspection of the property, and within a week or two, you'll get a reimbursement for how much you paid. So yes, they will fund the money, but yes, you have to cash flow the property up front. So again, having other people help you out with money if you don't have it yourself is a great way to get started as a real estate investor. The other thing you'll have to have cash flow for is for your monthly interest payments, because when you're paying back a hard money lender, you almost always have to pay an interest payment every single month on the money that you borrow. So the more money you start to borrow, the larger that monthly payment will be during the course of your flip. So you want to make sure you have the cash set aside for that. Or again, borrow it from some other place. It might be some other asset you have that you borrow it from, or you might borrow it from somebody else. But whatever you do, you have to make sure you have the cash to get you through that deal. Okay, let's talk about my favorite, and that is private money. Amber and I started our business 20 years ago, and because of the huge debacle that happened in our country in 2008, the financial meltdown, that was a real estate-induced financial crisis where all the banks pulled back and wouldn't lend money anymore to real estate investors and to a lot of people in the country. And we had to figure out how to fund our brand new real estate investing business. So we had 2 contracts that we had to get these deals closed on, and we didn't have the money because the banks pulled back. So we figured out how to build a private money lender base. You can learn more about that on our channel. We talk all about how to go out and find private money. We give different stories and what, so please make sure you check it out. Private money is just average people that have money set aside in their checking account, in their savings account, in their 401k, in an IRA. It's just sitting there and they'd like to earn double-digit returns. And if you work a deal with them, they can be your private lender for your funds. One of the greatest things about private lenders is they are typically not really overly savvy investors like a hard money lender is. They're not going to be looking for all the same requirements that a hard money lender is. They just want basic protection, like a mortgage to protect their interest on the property. You'll have a note and a mortgage that you'll file. You then will have insurance that you'll name them as an additional insured in case of a catastrophe. They can get their money back. And so they are fully protected inside that investment by that asset itself. But many times a private money lender will loan you not only the purchase price in full, but also the renovation costs in full. Many times you can get that money up front, and if you structure it like we do, you don't even have to make interest payments on that. You can just make one lump sum payment at the end when you sell and flip the house. Let's say you borrowed $100,000 from your uncle and you put that money on a piece of property, you flip that house, and at the end you paid him back his $100,000 plus whatever interest that you negotiated with him at the end of the term when you sell the property. That's how you cash flow a property and create a win-win scenario. He gets his money. At the end of the term, you flip a house, you make your profit, and everybody's happy. So private lenders is a great way to do this deal without using any money out of your own pocket. A lot of it when it comes to real estate investing is a mindset shift. You've been programmed that you have to have money to be an investor, and the truth is a lot of it has to do with the name. I'm a real estate investor, which tells your brain I have to have money to invest to be an investor. What you have to have is a clever way to be able to get money. It doesn't have to be your money. Be very clear about that in your mind, because as long as you can find a deal, you can usually find a way to fund that deal. You got to stop saying I can't, or I don't have money, or I don't have the money. And even if you're someone that has great money and you've got $50,000 in the bank and you've got $100,000 in your savings or in your retirement account you don't have access to, you've got some assets but you just don't have them right at your fingertips. Stop saying to yourself you don't have money to invest in real estate. You do have money to invest. I want you to stop saying I can't and start saying how can I? When you start saying things like how can I find the money, your brain goes into a searching mode and will figure out exactly in your environment who you can talk to and how you can structure a creative deal. I want you to learn about creative financing. Again, spend some time on our channel. Learn about creative ways to fund your real estate deals. What about if you partner with a seller? What if you said to a seller, you know, I'd like to pay you your $200,000 for your house, but can I give it to you in 6 months? Well, what do you mean? Say, what if I gave you your $200,000 in 6 months after I came in and fixed up the house and flipped it, and once I sold it at full market value, I'll then give you your $200,000 and I keep the rest. That's one simple way. I've oversimplified that, but that's an oversimplification of how you can what's called a joint venture with a seller to fund a flip. Didn't use any of your own money. didn't use any of your own credit. There's so many ways to get it done. You just can't have limitations in your mind. You can't tell yourself, I don't have enough money in my checking account, therefore I can't fund a real estate deal. There are so many ways to get it done. So stop saying I can't and start saying how can I. Once you understand what it really costs to flip a house, your next step is knowing what a property is worth and how much you should actually pay for it. Go watch the next video where I'm going to walk you through exactly how you can estimate repair costs on a flip, how you can estimate the ARV or after repair value, how you can estimate all the costs associated with the property, and determine what's called your MAO or your maximum allowable offer. It's the same exact system that my team uses to still flip over 100 houses a year and make sure that we are always profitable on every deal we do. It took us 20 years of blood, sweat, and tears to build this system, and I'm going to give it to you right now for free. So go check out this video. If the video is not here, I guarantee you the link is in the description below.